Hello everybody, my name is Rodney Cavagayo, and today I'll be attempting to give you a simplified explanation of the cost of goods manufactured, or else I'll be referring to it COGM. So first things first, why do we need to know the cost of goods manufactured? Well, the reason we need to know the cost of goods manufactured, or COGM, is so that we can later calculate the costs of goods sold, or COGS. So let me start you off with a formula, and we can calculate the cost of goods sold with a formula. Cost of goods sold equals beginning finished goods plus cost of goods manufactured, or COGM, minus ending finished goods. Or a little more simply, we're going to do it like this. Oh, excuse me, wrong color. Give me 1 second here. Call it COGS equals BFG plus our COGM minus our EFG, or ending finished goods. Okay, everybody got that? COGS equals BFG plus COGM minus EFG. Now that we have that, this is just a product of what we're really after, which is COGM, or the cost of goods manufactured. So now we know why we need to know COGM. At this point, we're going to have to go ahead and figure out what our COGM is. What is our cost of goods manufactured? For that, you can do that with the formula cost of goods manufactured equals beginning work in process plus total manufacturing costs, or TMC, minus ending work in process. So again, we're going to go and simplify that a little bit. COGM equals BWIP plus our TMC, total manufacturing cost, minus our ending work in process, or EWIP. So now that we have that formula for COGM, cost of goods manufactured, we're still going to need to take it back a step and calculate our total manufacturing costs. So to calculate our total manufacturing costs, we can use the formula TMC, or total manufacturing cost, equals raw materials used plus direct labor plus manufacturing overhead. So again, let's type that out here. Let's call it TMC. Excuse me, let me just the color there. Fix the color. Equals RMU. Oh, what's going on here? Give me a second. Let me do that. RMU plus direct labor, or DL, plus our manufacturing overhead, or as I'll call it, MO. Now we have our formula to find our total manufacturing cost. However, in there it shows raw materials used, which is a periodical thing, because you have to remember that raw materials used is not the same as raw materials purchased, which is raw materials used is the materials we use during the period given, say January 1st to December 31st. Raw materials purchased are the materials we purchased during that period. But to find out how we get our raw materials used, we find with the formula raw materials used, or RMU, equals our beginning raw materials, so I'm going to call it BRM, plus purchases, P, minus our ending raw materials, ERM. So our raw materials used, our beginning raw materials are the materials we have at the beginning of the period. Purchases are the materials we add to those materials we've had at our beginning raw materials. And our ending raw materials are whatever we're left over with at the ending of the period, like I said, January 1st to December 31. So now that we have that formula, I know I just threw a lot of formulas at you really quickly and it can get really confusing, but there's this thing that makes it a lot more simpler to understand and it'll probably help you figure it out a lot easier than just trying to figure this out by looking at it and going by it. So basically, it's called the schedule of cost of goods manufactured. And it gives you, it kind of breaks things down for you on how to calculate COGM to find out, to insert into the formula to find COGS. So the first thing we're going to do is our direct materials, and we start off with our beginning raw materials, which say we had $150 worth of raw materials at the beginning, and we purchased another $100 of raw materials. Add those up, we have $250, but we're left at the end of the period with $50 of raw materials, which means raw materials used is up. Here we go, 200. Next, we're going to insert the cost of our direct labor. So that's basically paying for the labor to create whatever we're creating in this factory here. So our cost for direct labor, 200 bucks, 300 bucks, excuse me. And we'll also add to that manufacturing overhead. We'll call it another $200. So we add all those up, our raw materials used, our direct labor, and our manufacturing overhead, add them all up, and we get our total manufacturing cost of 700 bucks. Okay, now that we have our TMC, we'll move along and we'll add, say, $300 of items that are our beginning work in process. So these are items that are being made at the moment, aren't ready for sale. So we're going to add to that $300 in that account. So that's $1,000 between total manufacturing costs and beginning work in process. From that, we will subtract our ending work in process. This is finished goods that haven't sold yet. So that are still in our inventory. Let's say we still have about $400 worth of inventory. So we subtract that from the 1,000, then we get our cost of goods manufactured, which is $600. Then we can go ahead, now that we have our cost of goods manufactured total here, 600 bucks, can go ahead and insert that into the formula for cost of goods sold. Here we go, cost of goods sold, and it'll go right here along with the totals for beginning finished goods and ending finished goods. So you're going to add beginning finished goods plus our total for cost of goods manufactured and subtract our ending finished goods to get our cost of goods sold. And that pretty much lays it out for you as simply as I could make it. Thank you for listening. Have a good night.